Well, it's good to be with you today. This is Buddy Crum, Dr. Buddy Crum. I'm glad to be here with Don Wells again. Always like to be with you, Don. Let's talk about investing.
Yeah.
Help me invest, right? That's what
Help
we
me
need.
Invest. Helpmeinvest.com. And for those that are listening, that's one of the things that we've put together as a tool, a resource to help investors that are looking for some guidance. As always, we remind people we're not selling products. We don't have something to sell you. We're trying to help you get your money working for you, because one of the things that as you begin to invest and you see things grow, you'll begin to understand how powerful compound interest is and how it can aid in helping you to build wealth.
Timing is another factor that's always added in.
Yeah.
Not only diversification, professional management, but timing.
Yeah.
I would really like for somebody to tell me what is the market today. You know, it's all-time high, and yet is it too high or not yet? But based on some other numbers, you know, price-earnings ratio, all of those things, it's very complicated. But that's why the professional people have the resources to study these things.
Yeah. And that's, you know, there are people that spend their time, money, energy, training, you know, watching the market and looking, and they do very well. For the average investor, we like the indexes because, again, it gives you that diversity. It gives you a small fee of getting into it. It takes a lot of the risk out of the portfolio. You know, we were recently talking about a couple of different stocks, and one that had done very well, one that had done less well, and you think, well, I should get rid of the one not doing as well, buy one that's doing better. But that relationship, because if they're the opposite of each other, if one of them, let's say you have a pharmaceutical stock and you have a utilitarian or utility stock, they may work opposite of each other. So having them both in the portfolio, even though one is getting better returns, keeps the volatility, which in overall time gives you a better return. And so that's some of the dynamics that go on when you're buying into an index and you're staying, you know, diversified across the whole spectrum of investments.
You know, I have to remind people from time to time that the stock market is an auction market.
Yeah.
It's not a guarantee of, and people buy like you do on an auction.
Yeah.
Whether what you think something is valued and what you think it will be valued in the future.
Yeah.
And, you know, we all look for a bargain. That's why we go to an auction.
Yeah.
But we really never know when you're bidding against somebody who may want that stock than against somebody who wants to get rid of that stock. And that's still, the auction goes on, even in the stock market, even today.
You're absolutely correct. And that's, you know, the other reason that I tell people, it's really designed, if you want to build wealth, for more of a buy and hold strategy. The professionals play, which is who you'd be competing against, with the buy it low, sell it high. But for the individual that is trying to build wealth, it always goes back to the basics. The best thing you can do is consistently invest over a long period of time, holding with a buy and hold strategy.
Yes.
I read something the other day. It was essentially from the kind of the conception of the market, around the last 80 years, that if you'd put in $10,000, that would be worth about $22 million today, just 10,000. And you think, well, that's a long time, but what that tells us is the buy and hold strategy works.